Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 23rd of June here in 2022. Let's get started with the S&P 500, which is doing a holiday bear market rally in the context of the downtrend, which is lower low, lower high, lower low, lower high, relatively big lower low, lower high. The most recent swing trade strategies were short, playing down to these targets, and the next move of the market has a decent shot to a rally. Call it what you wish, but it's a bear market rally, a counter trend retracement, or just a little pullback. And that's what we're looking for in the S&P. And that's going to take us up from just above 3,600. That could play up to 3,890, 3,900, and maybe a little bit higher. What's the precedent for that? Where do we get that logic? In the context of the ongoing bear market, that is what has happened. That was a stronger bear market rally than expected, and other little smaller moves, but nonetheless, the most recent bear market rally was from 3,800 to about 4,200. Simple numbers, but effective in getting the price points across. In the other equity futures, the Nasdaq is already achieving some of its targets, being on the weaker side because of the continued spike or climb in interest rates. And that is the TNX, the 10-year Treasury note, and that's the yield. It pierced above just about 3.5% and has pulled back right there and hit a bottom, at least in today's session, at 30. But that's not 30. That's 3.0% for the 10-year Treasury note. That is a very key level we're watching. Most recent time we saw this was at the 2% or 20 point, that's your index TNX, but 2% level, hit it, pulled back from it, never really looked back. So we're going to continue watching interest rates and Fed policy and future interest rate hikes, what inflation does, what consumer price index, producer price index, and everything else, and consumer sentiment, how those play in the bigger picture. But the bond market, just like the equity market, continues its downtrend of lower lows and lower highs. This is a bear market rally. I like to use the word pullback retracement, but to be fun, it's still a bear market rally. Bonds are in a bear market, they're going down, and anything that goes against that is a contra or counter trend. Trend is down, going against it goes counter trend, and that would be a rally. So bonds are doing roughly what the stock market is doing, and they're tracing or trading similarly in that context. Of course, yields up, bonds down, stocks down as well. And that's not something you normally see. Normally see a rally with the bond market, prices at least, with equities climbing. The one thing that's different is inflation, and continues to be the big picture. Speaking of inflation, we got a nice, decent, this time a counter trend rally or fall, counter trend sell-off in crude. Crude continues to go higher, and that is part of the inflationary concern. We can look at other commodities, but crude is on a pullback, and that is relief rally, not a rally, but it is a relief to the broader economy. And that would be nice if oil prices at the pump or gas price at the pump came down and continued going down. That would be a good sign that inflation was breaking. We'll continue watching that and other commodities as well. That would include soybeans, which had their own pullback and retracement down from about 1,800. We can look at wheat. Not that I look at commodities here in the videos with you much, but that is a similar theme that's across the board. That commodity prices, although strongly uptrending, wheat and oil and others, caught a big inflationary bid. We have seen that pull back. So it's not just crude oil. It is other commodities which have been bullish and have had a sharp pullback recently. That would be a good thing, or at least an ease in the broader economy if these trends continue. If they do not, if the trends continue up, then the next move for these inflationary or commodity-based products would be back to the upside. And that could be a catalyst to keep that trend going down in the S&P. Gold is not doing a lot. It's still in its trading range. In fact, that range is compressing even tighter. And the most recent range is about 1875 and about 1800. Pull that back to a weekly perspective, and we still see not a lot has gone on since 2020. Gold has been in a wide range from about 2050 and about 1750. But the midpoint of the fair value, that's roughly 1800 or slightly above. Again, contrast that to crude oil, which from those pandemic lows have traded much higher. The bond market, which has been volatile, that's what you would expect in the context of a market going down. That's your pre-COVID. Bond market was rallying, but as the equity market falls, of course, equity futures fell at that point. The market is rising into the later part of 2021 while the bond market fell. And that's where we are with the bonds going down and stocks going up. That's the big picture. When we look at individual sectors, take a look at some of the leading edge and the sector play. Financials has come down and fallen from 42. K is technology, that is roughly the Nasdaq in general, and that's down from about 180 to just about 120. That's a big pullback in the ETF. Consumer discretionary, or the retail, broad picture retail, it's traded down from about 220 to essentially 138, 140. And energy is the only one that was bullish in 2022. That alone has had a deep correction, or call that a catch-up sell-off. It got overextended, and the inflationary forces were strong with it and helped boost oil and stocks like Chevron and stocks like ExxonMobil and other oil-based energy companies, but they have seen their pullbacks on weekly and daily charts. Let's transition to talk about some earnings. What stocks have earnings, and is there any major companies coming up? Well, Accenture just had earnings in today's session. This is just a scan of stocks that have earnings in the next few days. So Accenture is a stock that has fallen from 420 or 410. It trades currently at 270. Its earnings play initially started with a down gap that just about filled and left that stock unchanged after its earnings this morning. Friday will give us FedEx. FedEx will report earnings. Tomorrow it will report earnings after the bell on Friday. So any positions, be sure that you are aware of that within that stock. But it does continue its downtrend like the other stocks, but will play up into this resistance area 240. We will see if we get that gap that plays us up to the 270 high, or if this downtrend continues, if earnings are weak in the carrier in the FedEx company, and that will take it back down to continue the downtrend. Another retail name that has been quite on the downside has made a lot of lists that I do in stocks making new lows, or stocks that are downtrending, getting weaker, that provide bear flag trade opportunities on the daily chart. Nike continues to come up in that list, and because it continues to make those new lows, we'll pull to the weekly chart, which is over here, that shows how strong the rally was, but how equally, if not more powerful or quick, rapid, violent, the sell-off has been from about 180 down to 100. That's going to be a key support level to watch going forward. Earnings will be in Nike at the beginning of next week, and we'll have Walgreens Boots, another retail type name that has been a little volatile but weak on the big picture. Other stocks will play the week after into July. Not far from now, we'll be into July here in 2022. But as we look at those, quick update about which stocks, just quick note, not a deep dive into it as usual, but which stocks are weak, getting weaker, and which stocks made new 52-week lows in today's session. Leading edge is going to be a financial company, Berkshire Hathaway. Behind that is Facebook. Still not used to calling it Meta, but it is Facebook to me, maybe to you as well. But Meta, Facebook, is continuing to push those new lows. So we're seeing technology companies. That's the theme I want to leave you with in today's session. As stocks make new lows, some of the stocks make new lows, they're going to come off in the financial sector. To an extent, some of them will be in technology and in retail. Others might be in materials, Freeport-McMoRan, and energy stocks, not necessarily making new 52-week lows, but was weak in today's session. But just name a few: JP Morgan Financial, Qualcomm, Morgan Stanley Financial, Honeywell, Caterpillar, John Deere. They tend to go together. And we'll look at General Electric, CSX, Emerson, and down the list. Some of those stocks making new 52-week lows, 42 of them out of the S&P 500. And we'll click through a few names to end the video. There is Berkshire Hathaway and Facebook, a new low printed. JP Morgan, again, part of the broader financial sector, which also just about made those lows. Qualcomm, leading technology, or a major technology company. Morgan Stanley, Honeywell, Caterpillar, and then John Deere. And those are just sorted on the list of market cap. So of those 42 stocks, these are the top 10 or so that made new 52-week lows sorted by market cap. And we'll have consumer sentiment and new home sales on Friday, just to be something to watch on the economic calendar. And one more quick note, in today's session, weakness was from energy. If you ever look at the sector play right here, another way to look at that is through the heat map here in thinkorswim, market watch heat map, S&P 500. And you can see how big or how large the market cap sectors are and how that affected today's tape. Energy, financials, and industrials were on the sell side, but everything else just about was on the buy side. That included some of the technology companies, and that's why the Nasdaq, end of the day, strongest with a gain of 1%. As always, be careful and safe. This is Corey Roseman with tonight's Theo video update for June 23rd, 2022.